Home ownership was once an attainable and realistic dream for most people around the world. But home prices have skyrocketed, supply has dwindled, and the sharp rise in the cost of living have made saving for a down payment more difficult. It seems that younger folks will never be able to buy a house. So, if entire generations are unable to own a home, but they still need a place to live, then what does living in the future actually look like? Will we become a society where home ownership is restricted exclusively for the upper class with a permanent tenant class that rents from the elite? Or will we be able to reclassify housing as a given right and not a commodity to extract value from? Don't worry, we can still change our outcome, but you first need to understand the situation and what we are all up against. In this video, we uncover the true end goal that corporate landlords are seeking and how we can combat this potentially dystopian future. The past 20 years or so have been the ideal breeding ground for creating the unbalanced housing market that we face today. As we detailed in our previous video, home prices have been pushed up by higher demand, while existing owners have become much less likely to sell, all while foreign investors and institutional corporations have realized how lucrative the business of real estate can be. Be sure to watch our video to get a clear understanding of why exactly home prices will likely remain inflated for years to come. Also, download our free guide when you sign up for our newsletter as well. While real estate costs have steadily increased, average wages have not kept up. Therefore, home ownership has become out of reach for many. Since the 1980s, the average salary for US workers has grown by just 17% after accounting for inflation, while the median price for real estate has gone up roughly 85% and now sits at a record $350,000 in 2023. That disparity has hit the lower and middle classes the hardest. If you adjust for inflation, the average hourly wage for production and non-supervisory workers has risen just 18 cents since the 1970s. So, if we are all struggling to buy homes, then how are foreign investors and private equity firms able to snatch them up so easily? Also, why are they so interested in taking them away from the working class? There are many rich investors and corporations out there who can get into real estate, but they still can't buy up that many homes since housing is still relatively expensive. But is it really? If you think that they need to pay $350,000 for every house they acquire, think again. All they have to do is provide a 10 to 20% down payment and find a renter to pay off the rest. If they enter a hot market, the corporate owner can even charge more per month than the cost of their mortgage, thus bringing in a small profit on top of getting their mortgage paid off. What about their costs, though? They should spend money to repair and maintain their properties. But investment companies have even found ways to shift that burden onto the renters. They either provide them with some self-help videos on how to fix their own broken pipes, or just ignore their tenants' requests for repairs and hope that they get frustrated enough to take care of it themselves. Let's take a look at some numbers with a simple example that doesn't include taxes, insurances, or admin costs. We'll use an average $350,000 home as our example. With 20% down, our corporate investor needs to shell out just $70,000 to purchase the property and agrees to pay a 30-year mortgage at $1,500 each month. They then advertise their property for rent for $2,000 a month. Therefore, the landlord can receive an extra $500 per month. After 30 years, the mortgage payments are over and the landlord can receive the full $2,000 a month as their gross profit. Meanwhile, after those 30 years, the tenants still need to keep renting since they were unable to accumulate any wealth to buy their own home as they kept making rent payments. So, they ultimately have to rent their whole adult life, from when they are 20 years old until they are 80. That is 60 years of continuously paying rent. Therefore, gains from the first 30 years are $6,000 per year, while gains from the next 30 years add up to $24,000 per year. Meanwhile, 60 years of compound growth at just 3% per year allows their property to appreciate from $350K to almost $2 million. Thus, the potential lifetime value of each tenant is almost $3 million, generated from just a $70,000 down payment. Of course, there are taxes, vacancies, and some maintenance costs, but you can quickly see how lucrative real estate can be for a corporation. While this singular case of wealth extraction already seems sufficient, these corporate entities need to answer to their shareholders, who are always seeking constant growth and new revenue streams. So, what is the true ambition for a corporate real estate landlord? Their ultimate objective would be to control the market for housing so that you couldn't buy and you could only rent. In other words, a permanent subscription model to live. All humans need a place to live. If one single entity controls the supply of homes in an area, then tenants would be forced to rent from them. If this corporate entity can establish a local monopoly in high-demand neighborhoods or communities, then they could also have full control over rent prices since they would be the only game in town. So, that $3 million that they extracted from each tenant could easily become $4 or $5 million with annual rent hikes. Therefore, corporations would have full control over the largest wealth generator in our society and full control of the pricing for renting it out. They would maintain all the power. That is the real issue here. It's not that they are generating wealth, but they are doing so by taking that opportunity away from the rest of us and charging a premium for it. Already, the average homeowner has a net worth that is 40 times greater than renters. Denying people the chance to buy a home, combined with charging them higher rents, will continue to prevent them from ever building any meaningful wealth. Essentially, their end goal is to establish a modern feudal system, which was the social and economic structure that dominated medieval Europe during the Middle Ages. Simply put, feudalism was a concept where a lord gave a renter a piece of land to live on, but never to own, in exchange for labor or a portion of their wages or crops that they grew. That definition sounds quite similar to what is developing in our society as we speak. If a portion of your salary is always allocated towards rent, and you never have the ability to purchase your own home, then are you actually free? Your labor will always be used to pay your debts to your landlord, but you can never fully pay it back to gain ownership. In fact, you are powerless and will always be dependent on a landowner for shelter. When the end goal is to retain power rather than to produce goods or value for society, then this can be the unfortunate outcome. This dystopian outlook may be coming faster than you realize. As recently as 2019, the share of single-family homes purchased by investors was just 19% of the market. Today, it has already jumped to 27%. According to MetLife Investment Management, by 2030, 40% of single-family rentals are likely to be controlled by institutional investors. Of course, it would be impossible for corporate investors to conquer the entire real estate market. But they just need to target some strategic locations and buy up units that the working class is also seeking. Expensive housing is already out of reach for the working class, so investment firms just need to focus on restricting the supply of affordable housing. The investment company can be exposed to high levels of risk if there is a housing market crash, but if the corporation owns the majority of the supply in an area, and people still need a place to live, then they can keep collecting money from renters. Besides, the value of their homes only matters if they intend to sell them. If they plan to hold on to their properties indefinitely to keep churning out rental profits, then the price of their assets is irrelevant. Despite this growing trend towards permanent renting, it's not all bad news. Contrary to the Middle Ages, we are all now much more literate and aware of our opportunities and our freedoms. We have access to the internet and can raise our collective voice against being exploited. Governments are also aware of this issue and have proposed laws to curb investor purchases of homes. In 2022, the Netherlands passed a law banning investors from buying homes solely to rent out. In 2023, the US Senate proposed a bill to eliminate tax incentives for investors who have bought 50 or more single-family homes. Many countries have also enacted regulations that prohibit foreign investors from buying up their real estate as well. For instance, Canada currently has a 2-year ban to stop non-residents from buying homes. Now that you are aware of this issue, it is time to make a stand. If we don't want to rent for the rest of our lives and want access to more affordable housing, now is the time to vote for representatives that understand this issue and will support the working class. If you learned something, please like this video and be sure to subscribe for more uncut perspectives. As always, thanks for watching.